Hey guys, happy Sunday night. How is everybody doing out there in YouTube and Twitter land? All right, let's see what's going on. We're going to have a daily factor show, but let's check in on the. Gosh darn it, I forgot to put on my visual effects. I need maximum enhanced skin appearance, all the way to maximum. How about that? I look 10 years younger, don't I? All right. Wish I could enhance my intelligence also, but it's one thing to make me look better, but I'd like to sound better. So, all right. So let's see here. All right. Little S&P futures action. Let's see what we're doing here. Down 16 bips, otherwise known as a basis point, or 16 100ths of 1%, or however you want to think of it. Not too bad. It could be a lot worse. All right. Well, this is a 30-minute chart. So I don't even see a gap. It looks like, I bet we did gap down. But then we had this bar right here that went and filled the gap. And then it was immediately met by sellers. So that's kind of par for the course. When we have a gap lower, lots of times you see a kind of a quick move back up until the gap's filled, and then it resumes in the direction of the trend. Sometimes not. All right, so let's check out a little NASDAQ action. Get the microphone closer. Well, actually, that gap up, the bar that filled the gap that I was talking about actually happened on Friday. I was looking at it wrong. But in any event, the markets did open lower, but have come up and filled the open to close gap for whatever that's worth. We probably won't know much until the morning or until London comes in, see if they start selling it hard. Excuse me. Hey, William, what's up, bud? What is up? I need a little bit of caffeine or sugar, however you want to think about it. All right. Let's look at oil and gold. All right. A little NYMEX crude. Well, it's under $100. I mean, let me take these darn moving average crossovers off. It makes it hard to see what's going on. All right. Well, let's look at the volume. I think volume's better to look at than price. Or lots of people do. Anyone who believes in volume profile and market profile. Price is an advertising mechanism, but it can be at a discount or it can be at a premium. Volume kind of tells you where the price really is. Anyway, we obviously got way far ahead of ourselves on this time frame. We came back and now we've established a trading range at 95. We didn't revert all the way to mean. That could happen too, and it probably will when the Straits of Hormuz open. It'll probably happen in a quick way. Back down to 65 might be a good place to target if you're trying to do a reversion to mean trade. If you had information that the Straits of Hormuz was going to open up tomorrow or something, you might want to aim for, a month out and aim your strategy at the 65 strike. But right now we have a higher mean developing, at least on this time frame up here where we're trading right now. Let's look on the daily time frame. The daily mean is trading around 77. But I like to trade shorter term. I like to do options that generally go out a week or two. And for that type of time frame, I think the 30-minute works pretty well. All right, so that's crude. It is down. It's important that it's good that it's down, given everything that's going on in the world. Let's check out a little gold, some gold futures. Hey, Brad, thanks for being here, bud. And Cash is in the house too. All right, so that's not looking good. What were we looking at here? 30-minute chart, gold breaking down. Oh, well, It's probably just testing this prior support. It's probably pretty obvious that it might get there. And in fact, this area was an important area because it capped a couple of rallies there, and it's a key pivot on the chart. 44 whatever, 4,400 to 4,420, whatever. Key pivot, we're there right now. We'll see what happens. We'd love a short-term reversion to mean on this one. If you have K gold or something like that, or gold I or whatever gold, because a reversion to mean on this chart would mean it goes back up here at 5,200. You know, you could make a case the gold's way too far ahead of itself on the downside, and you know, and you could play for the reversion to mean if you wanted to. It all depends on the time frame you check, though. It's good to check multiple time frames. On the 1 hour time frame, it's still the reversion to mean trades at 5,000 on the 1 hour time frame, and this is definitely. Let's just draw a line down here. This is a key over underline. You could see this level has worked as a key level, both capping rallies in the past from both sides. You know, it was our all-time high for a while. Oh yeah, I didn't even see it. Goes, but look at that. Would you take a look at that? key level. So all it means is if we get accepted below it, I mean, we could look at the daily time frame and see where the volume is. Price is misleading. Volume tells a more complete story. So, man, on this time frame, the next trading area, trading range, I guess I should say, the last place where there was two-way action was 3,300. But heck, I mean, I'm not saying that's going to happen, but let's do this real quick. Let's just do a little Fibonacci and let's go off this. I hate how this Fibonacci won't cooperate. All right. So yeah, of course there's multiple fib levels. Lots of people like the half retracement, but the 61H, your ultimate fib level. And guess what that is? It's down there by that past two-way action at 3,300, the 61H 3,100. So, I mean, that's interesting. You could pull all the way back to 6,100, and at least on this time frame, given this rally, and still be in the confines of a bullish rally. That could be supportive, could be a great place to pick up more. Sometimes the inverse of 61.8 works too, which is the 38.2, which we aren't to yet. But heck, that's a 4,100 if you're a little bit more aggressive and wanting to buy the dip. Maybe 4,100. You know, if you're not that aggressive, 3,600, more aggressive but still bullish, or less aggressive but still bullish, 3,100. You know, if you have, depending on how much money you have, you could put in a limit at each price. I'll get some shares of GLD at 4,100. I'll put in a limit to get some at 3,600. I'll get some more at 3,100. If it goes much under that, it looks like you're wrong. But anyway, okay, so that's gold. So let's put silver to the same test. Let's put silver to the same test. So this was the last kind of accepted trading range. So we'll just go off the low from that trading range. And with the caveat, this is extremely subjective. So do your own research. Heck, oh, shoot. We're at the 50 right now, a little bit past the 50. The 61.8 on silver's at $57, 57 and a half. So that might be a good place to buy the dip. If you're bearish and it gets underneath that, you could probably make a trade aiming for 22s or maybe 31s. But you'd want to aim for prior two-sided action area, maybe even 47. But by the time, 56 gives, you're almost at 47. So, all right. So what else do we have to look at? Yeah, silver and gold are bleeding. Correct. Who's buying steaks? I already had steaks tonight. The guys were over. We do steaks every Sunday night, and it was a good time. Thanks for being here, Retired. Thanks to all of you guys for being here. Okay, let's get this factor going, And let's just get this darn thing over with. Why don't we? So, of course, I need to go find it. I think it's over here. No, I don't want to do that. Oh, there we go. S&P Sunday night. Would you take a look at those graphics? Okay, I couldn't think of anything to do. So last minute, I was almost just thinking about not having a show, but I think these shows are fun. We had a good time last night. We have a good time every night we do this. All right, so you guys know the drill. You guys know what the factors, but my max factor, I think, is a better way to look at these funds than yield. Do not use yield to evaluate high yield covered calls funds or any fund. But also total return can be a little bit deceiving. You want to know how they got the total return, what the mechanics are and stuff. And the factor, I think, is more of an apples to apples level playing field type comparison. So we usually start just by introducing the contestants, and we start with the highest yield. Oftentimes, they're like I always say, oftentimes those are the worst investments, but it depends. Anyway, we have WPay yielding 67%. Unfortunately, the NAV's gone from 43 to 34, 43 to 34. Now, that doesn't mean it's terrible. The NAV's down 21%, but that doesn't include the yield it's paying. We want to, in the factor, we look at them separately. I'm trying to study the relationship between yield and NAV return. If I just wanted, I just use total return. If I just wanted to know the total return is important also. But all right, YSPI is also paying way darn too much, but their NAV isn't bleeding as much. I'll be darned. To me, right there, YSPI looks a little bit more valuable. Now, WPay isn't an S&P fund. It's more like a NASDAQ fund. I don't even know why I put it in there. It's just, anyway. So, I mean, one of them has to be the worst, and it's probably going to be WPay tonight. Doesn't mean it's doesn't mean it may not work for you, but it's been the worst investment lately. I should also say the max factor is a trading index, and it factors in the momentum of the underlying assets, because that's probably one of the most important things, maybe the most important thing out there. But if you could know nothing else, like I always say, if you just knew Tesla was going to double next year, you could go get TSLA, or you could do that. You could go get TSLY, you could get TSLP, or you could get TSLW. Depends on, but they're all going to do pretty well. If you know Tesla's going to double in the next 6 months or something. Or you could just go get TSLA, and if you had needs for income, you could just sell off a little of that as the price doubled, and you'd be in good shape too. In other words, there's no easy button, but if you just know which way the market's going, that's about 98% of it. Then after that, you can watch a show like mine, we can study how they do the options, because there are differences from fund to fund, and I think it's interesting to study. All right, WDTE. This one also pays way too much, 37%. That's a trailing 12-month. I think they've recently lowered their target to like 30 or something, but on a trailing 12-month, it's kicking off about 37% yield, but who cares about that? Let's see what it does to the NAV. Okay, well, 37% yield got you a NAV that dropped from 32 to 28. Well, that's not great. It's better than YSPI, and it's better than WPay, but to be honest, it's also about half the yield of YSPI and WPay, so you have to factor all that in. Then we have SDTY, yielding about 28%. I'm making sure you guys are able to see this. I want to make sure I'm sharing the screen and everything. I don't know where you guys went. Okay, so everything's good. Let me just do this. No, I didn't want to do that. Holy cow. That's a sight to see, isn't it? All right, let's just do that. And then I don't want my text up there. Gosh darn it. All right. So WDT, SDTY. So SDTY pays slightly less yield, so I would expect slightly better NAV performance, other things being equal. And unfortunately, oh no, we don't get that. Over this period of time, SDTY is not done as well as WDT. Now, they're pretty much stable mates because one's YieldMax, one's Defiance, but it's the same people calling the shots. So in any event, be that as it may. Then we have SPY-T. Speaking of Defiance, same people calling the shots, but this is a target fund. They don't take as much, they don't put on as much risk to do this fund. So because they're just trying to pay a 20% target. So let's see how it affected the yield or the NAV. NAV's gone from 1785 to 1621. That's about down 9.19%. All right. Well, then we have XPay. Speaking of target funds, they also aim for about 20%. They've been a little bit, but they're getting about 21.5 right now, but their NAV's gone from 54 to 48. That's not good. It's down 9.99%. So actually recently anyway, SPY-T has been a better play than XPay. I don't have anything against XPay. XPay's Roundhill does a good job. We were just talking about XPay, and we were just talking about all these tonight in our chat. If you guys are in our Discord, Sunday nights at 6 when futures open, we have a little chat. We had Mark in there tonight. We had SB, and we had BR, otherwise known as Brad. Marcus never shows up. I wonder if Marcus is a real person. Has anyone ever seen him or talked to him? He's never been in. He might be a bot. I think he might be a bot, and that's why he's always pushing these crappy, these darn crappy auto callables. He's got to be a bot. Marcus, are you here? Where's Marcus? Where is Marcus here? All right, so let's go over here to EGGS. EGGS is eggs. This is based on the S&P. It's gone from 39 to 35, down 9.73%. All right, so let's study that. So we have EGGS paid a little bit less yield than XPay, so I would expect a little bit better NAV performance, or versus either XPay or SPYT, but that is not the case. They're all in about the same boat together. Then we have XYLG. Now this one only pays usually around 12%. Somehow it's been averaging 14.64. Must be a miracle. Things dropped from 29 to 26. NAV's down 11%. And after that, we have SPY-I. NAV's down from 53 to 49, but it is paying about the same as XYLG. It's in the 13 to 14% range. So, and you can see right there, SPY-I is looking a lot better because considering the yield's pretty much the same. SPY-I is doing a better job protecting capital. I know we all like that. I know a lot of you guys like SPY-Y, and then we have old XYLD down here. XYLD dropping from 40 to 39. That's not too bad at all. And that one pays close to what, it pays a little bit less. It pays about 11, where SPY-I pays about 14. That's actually a pretty good difference. It's actually about 20% less. Or 15% less. But in any event, even as bad as Global X has been over the years, or as plain Jane as it has been, the one thing they're good at is protecting value in a down market because they sell at the money options. Where SPY-I and some of these other ones are a little bit more aggressive with their option placement. Then we have GPIX. Now, this is one that's almost as popular amongst the people that love stability. Almost as popular as SPY-I. Now, it's not really fair apples to apples comparison because GPIX pays like a third less yield than SPY-I. Well, so we'd expect a lot better NAV, and we do have better NAV compared to SPY-I, but really XYLD is looking the best kind of out of these mid-paying bunches. Then we have JEPI. JEPI's been doing really well lately. NAV's down from 57 to 56. It's about 3%. Okay, whatever. Paying an 8% yield. And then we have SPIN from State Street. This one's paying about almost exactly the same yield as JEPI. So this is kind of a fair comparison. And man, I tell you what, JEPI's been doing a lot better job protecting capital. And JEPI doesn't just statically use the index underneath. They pick out of the 500 stocks, they pick 100 or 200, 150, whatever, the ones they like. And I think they use some kind of value formula. Anyway, value's been working lately, and you can darn sure see that in the results. JEPI is looking like the best one of the bunch right there. Then we have SPUT. SPUT dropping from 26 to 26. So that's basically 1%. It actually dropped 28 cents in the past 90 days. That's not too bad considering the 90 days we've had. SPUT sells daily put options. So that's pretty darn impressive if you ask me. SPUT selling those daily put options. My gosh. Investor income. Yeah, daily put right. I mean, doesn't pay a huge yield, but I mean, it's at 1 year total return of 9.4%. I mean, it's all right, I guess. But in any event, all right, let's get back over here. The S&P Sunday. All right, and then we have OVL, new to the list, just put it in the other day. This is from Overlay Shares. This is a lightning spread fund. And these guys do monthly lightning spreads, which is they own stocks, which in this case is the VOO. So they own big cap stocks through the VOO. And then they have their overlay is they write a put spread on top of the VOO. So we've seen lightning spreads that work before. The most famous example is Blocks. But they use weekly lightning spreads instead of monthly. But in any event, lightning spreads are really good in a bullish market, not so great in a bearish market. Anyway, OVL paying about 5%. But so the NAV ought to be really steady is the way I'm looking at that. And no, it isn't. It's down 6.47%. Come on, OVL. Really, out of all those, it looks like Spud and JEPI look the best, but it's not the only thing. We also have to consider the momentum of the underlying assets. These are all based on the S&P, so the momentum should probably be pretty similar. Some of them do a little bit different strategies, but then we also have to consider the risk we're putting on, the risk that the fund is adding into our portfolio. How risky are these? How much does the price fluctuate from day to day? And I don't think it would surprise anybody that JEPI is the least risky is the wrong word, the least volatile, and at least it has been the past quarter. It's 79% more stable than the market. They own value stocks. Value stocks are generally lower beta to the market. And these guys are really having a moment. They've been underperforming for a long time, but they do a good job at JP Morgan, especially if you catch the right kind of market. Then we have SPUT, the daily put right fund. I cannot believe a daily put right fund is doing this well. But so let's think of other daily put right funds. We have XDTE, and we have they do covered calls, same thing. But then we do we have what's the other put right fund? WDT. But the thing about WDT is it's Defiance, which is basically yield max. And so they pay maximum yield. So they pay 30, you're getting 37% out of this daily put right fund in the S&P. Well, gosh, if you could only had to earn 5%, you either would just sell a whole lot less options, and you should darn sure have better NAV than somebody who's paying 37%. So I think that's the magic there. They're doing daily options, which is volatile and all that kind of stuff, but they aren't trying to give you all the income so that looks pretty good right there. Look at this that's the best total return on the chart is SPUT. There's no way these guys don't win, especially when you factor in that they're super stable. Anyway, the other somewhat stable ones are XYLD, GPIX, SPY, XYL. They're all pretty stable. XYLG, SDTY, and SPIN. Those are the ones that are more stable than the broad market. SPY-T just barely missed, but then the ones down here, WDT, XDT, XPay, OVL, EGGS, YSPY, and WPay, which I mistakenly put on here, are more volatile than the broader market. All right, so let's look at the long-term max factor, see which one was the best long-term play at GPIX. And you have a GPIX has a 1 year total return of 13.2%. And it's kicking off an 8% yield. So what that tells me is the yield is totally supported by the total return. In fact, they could have paid a little bit a higher yield. They could have paid 13% theoretically and had flat NAV. But then right next to it, we have SPY, who does pay 14%. And let's see how their NAV is. Let's see here. Yeah, and let's look at SPY's 1 year NAV. SPY's 1 year NAV went from 49.74 to 49.27. That's what you call flat NAV right there. GPIX's 1 year NAV went from 47.83 to 49.84. That's actually up a little bit. Once again, GPIX isn't trying to pay as high of a yield, so they don't start in as much of a deficit as SPY. Not that SPY is not a great fund, but anyway, over the past year, GPIX has been the best risk-adjusted reward. SPY second, and then we have this darn SPUT. Even when you factor in that they pay the lower yield, because my formula looks for the highest yield possible. I want a high yield, but I don't want the yield to mess up your total return too much. I mean, that's the whole idea there. All right. And then we have, XYLG. I mean, these have all been decent over the past year, I guess, because the market's been up. Really, OVLs, if you just look at performance and don't worry about risk and volatility and that kind of stuff, OVL had the best year last year. It was plus 1605. But last year, it was about a 3% paying fund. So it also had the least, it was, it wasn't generating a high yield. Now, just recently, they switched to like an 10 or 11% payer. So the trailing 12-month is catching up. Right now, it's saying 5. So anyway, as their yield comes up to 13 or 11 or whatever, we'll really get a better indication of the true OVL. But yeah, OVL, as far as just putting on NAV, did a good job last year. I mean, so did Eggs. Eggs was up 15.55%. I mean, that's not bad last year, paying a 16% yield. Look, these guys, Eggs had flat NAV over the course of a year. They went from 35.75, 35.61. NAV's totally flat. So sure enough, what that means, the distributions are supported by total return. And look over here, that total return 15.5, they paid 16, basically had flat NAV. That's the way you do it. GPIX, we've already talked about them. They could have paid a little bit more in hindsight. SPY paid 13 and got about 12.5 worth of NAV, worth of total return. And sure enough, their NAV's down a little bit, but I mean, 50 cents or something. Okay, but that's over the course of a year. All right, so let's go to the short-term max factor. Short-term max factor figures momentum and other stuff, and it's a trader's index. And yeah, and I had a feeling this would be the case. I'm surprised about number 2. In fact, I'm going to override. We're going to do an editor's choice. I'm going to elevate JEPI to number 2. I don't think OVL deserves it because it was paying like 3% last year. But anyway, SPUT from State Street is number 1. Only got a 5.7% yield the past quarter, but you've had NAV that's dropped 28 cents in a quarter. That's 1%. That's nothing. So the 5.7% yield is real yield. I mean, JEPI is very good also. It paid a little bit higher yield, but the NAV's gone this quarter from 57.76 to 56.09. It's about a 3% drop in NAV, and that's why it's number 2. I mean, that is why it's number 2. But yeah, SPUT number 1, JEPI number 2. We'll drop OVL to number 3, and then we have the other ones that did all right or are doing all right this quarter are XYLD, SPIN, GPIX. Like I always say, one of those or maybe none of those can work for your portfolio. Let's go see what the market's doing. Let's go see what Bitcoin's doing. I think we forgot to check out Bitcoin earlier. And last night when we were on the show, it was just breaking this rising wedge, bear wedge, whatever you want to call it. But and that of course is a daily chart. Let's get out the 1 hour chart. And last night I was talking about kind of the classic setup when it breaks one of these is going back, testing and failing, and then making a new low. Well, that's what's happened for whatever that's worth. So so the next thing I'm looking for, this is just me, and I have a real simplistic view of technical analysis, but I'm looking for this area to hold, because if this area gives up and then we start making lower lows relative to other ones, I mean that's not a good sign. But if this goes down here to 63, stops, and there's and starts going up again, for now we're kind of out of the woods. But that's kind of the next kind of hurdle. Bears want to get it past this area. Bulls want to keep it on in front of this area, in my opinion. Like I said, I way oversimplified it. What's going on here, Chad? What's Chad saying here? Maybe, but it's the end of the month. We'll have, yeah, So we have end of month window dressing, and we're way oversold. So here's what I would caution folks. Let's talk about that a little bit. Let's talk about that. All right. So here we have what I was going to try to illustrate. I was going to try to show a bear market bounce. There was a huge, if you took it, I mean, they suckered you in. So let's put on the old okay. So right now we're pretty much here. I mean, obviously we're here. In April, we were right here where we are now. So once we busted past the line, it was 1, 2, 3, 4 down days. But then we had 1, 2, 3, 4, 5, 6, 7 days face ripping up, took back the 200-day, not just by a little bit, by a lot, left behind a bullish gap underneath it. I mean, it's true we didn't take back the 50-period moving average, but that was a huge bull trap. And so that's what I'm concerned about here. I'm concerned about that we peter around down here for a little bit. Chad's right. We're coming up on the end of the month. Boom. They want to do some end of the month window dressing. We're totally oversold. We have a huge bounce, maybe take back the 200 for a few days. And I'm not going to let that fool me unless something changes as far as the news flow goes. If it does that and the news flow is still hanging out, being like it is, I'm going to stay cautious. But yeah, I could definitely see that happening with end of month window dressing. And in fact, this rally right here was March 24th, 25th, 26th, 27th, 28th. So by the real end of the month, it actually sold off again. So, I mean, it doesn't work every time, but lots of times you get a rally right at the end of the month, and sometimes even the first couple of days into the next month, especially when it's the end of the quarter. So the end of March, the end of June. So let's see here, the end of June, if that worked. Of course, in a bull market, of course it works. I mean, but yeah, we did get window dressing, but it really wasn't window dressing. We just kept going up there. Let's look over here. Let's look at the end of December, the end of the year-end window dressing, the previous quarter. Didn't really happen that time, but it does. But I always look, those window dressing plays can be huge. Hey, what's up, Will? I just finally learned Will's name in Discord tonight. He's told me before, but I learned it. I learned it for good this time. S&P Sunday night, a great name, great topic. Yeah, Will's hoping to snipe at the bottom of one of the SPY funds that showing that can recover. Well, I think we have some good ones on there. I mean, I would point you towards SPY. I mean, but also GPIX. But also, I mean, and if you want, some people don't want a single digit yield. So you're going to take a little bit more risk. But XDTE, XPay, SPY-T, in my opinion, those have good potential. And they don't just, especially XPay and SPY-T, don't pay just a gigantic yield. So it's not as hard for it to recover. But heck, XDTE from Roundhill does a good job. I mean, Chad's saying, let the SPY show me 600 and I'll load the freaking boat, huh? Well, yeah, wouldn't that be great? Yeah, I think I agree with you, Bon. I think a lot of people do. I think a lot of us do. You think it's going to be ugly again at this rate? How does T-SPY? Oh, gosh, how did I miss T-SPY? Gosh darn it. All right, well, let's go look. I mean, that's a fair question. So let's go to the database. I guess I just screwed this one up. T-SPY. So let's just go grab it, copy it, and I'm going to copy it where we can look at it with my database of, not there, right here. So let's just put it down here. It's not going to be in the nice graphics, but let's see how it would have done. All right. Well, just on the short-term max factors, negative 95. So it looks, I'm trying to look, it looks like it would have finished. They didn't put this as part of the table. That's why I can't sort it. Let me try to get this. I tried to do this earlier. For some reason, this is jacked up format. Well, maybe it won't let me convert table. Anyway, it looks like it would have been mid-pack. I mean, but let's just look at it and just consider it. So we have a 15% yield. I mean, that's what it has been paying. And it's a trailing 12 months, so it's just an average or whatever. We have a price that's gone from 25.63 to 23.32. And that's in the past quarter. So that's about a 9% downdraft. Let's look at something else that paid similar yield. We have XYLG. XYLG's NAV was down 11%. That's a good look for SPY. Let's look at all. Yeah, I know it. I missed darn Sticks too. Is Sticks? Anyway, we'll look at Sticks in a second. But it looks like SPY would have been mid-pack. It looks like it, just comparing it to some of the other ones in the same price range, would have come in ahead of XYLG. XYLD is the tough one. It's paying about that in that range and is only down 3.45%. It's just different funds for different times. That XYLD is one of the worst performers in a bull market, but in a sideways market, because they sell those at the money options, it gives them a little bit more buffer. But anyway, so T-SPY also pays in the same area as the SPY. So SPY's NAV was down 7, T-SPY's NAV was down 9. I think that's pretty close. And we have Eggs. Eggs pays around the same price, and their NAV was down about 9.73, a little bit more than T-SPY. Let's look at safety. T-SPY's an 88, so it's 88% as stable as the broad market. It looks like it would have done mid-pack. I mean, just looking at it, it looks like it would have maybe come in 5th or 6th. Sorry about missing it. Okay, now what about Sticks? Chad is always into this Sticks. And how did I miss Sticks? Sticks may not be old enough yet. Let's look over here. I swear I put Sticks in, or if it is old enough, it just turned old enough. But I don't know. Let's look at it this way. TSYX, TSYY, TSMY, TSLY, TS whatever. No, it's not in here yet. There it is, though. TSYX. Yeah, January 6th. Okay, so we're going to have a big party when it turns 3 months old. It's going to turn 3 months old in I don't know, like about a week and a half or something. But we could just look at how it's done so far. We don't have the NAV for a quarter yet, but it's paying around the same yield as those other ones, as the ones we were just talking about. Hey, thanks, Chad. I appreciate that. Oh, shoot, they hit you with an ad. I'm sorry about that. I would think that'd make you less likely to pay. Oh my gosh, I figured out something. I just figured that out. I'm the reason for that. I've always, how many times have I got on a live stream with you guys? I said, oh, just a second. I got to go over here and I got to hit monetize. Because lots of times I'll do a 2-hour live stream and there'll be 50 people here and we'll have a good time. And I'll look back later and it wasn't monetized. Well, I just saw there's a new feature in StreamYard and it said include ads. And I checked yes, just as an experiment. And then I went over here to my videos and it was already checked. So this whole time I didn't need to go check it again. I just can do it in StreamYard on one step. Well, next time I'll uncheck it. Sorry about that. But it is nice not to have to do 2 steps. There's sometimes I want to monetize it, but there's lots of times I'm just trying to do a quick show like tonight and I didn't really prepare and stuff. I would have been fine, just no ads. Next time we'll do no ads. I just try to want to do the ones on a Friday night where we're here, a couple of hours and we have a good talk. Freaky Friday is a good one to monetize. I mean, as you guys know. Yeah, I hear you on that. Yeah, Fish. Okay, I'm just catching up with the comments. Bitcoin is tanking. I just saw Oracle's comment there. Okay, well, that's the daily chart. Let's put it back on the hourly chart. I mean, the only reason I care so much about Bitcoin is because it's so, or not the only reason, but any high yield fund you have, if you have, or not any high yield fund, but lots of high yield funds you have, say you have, shit, I didn't know my face was on there. Say you have WPay, say you have YMAX, say you have YMAG, say you have MAGY, say you have anything. There, it's in the high yield space. It's just so correlated to Bitcoin because the high yielders, that's the way they get high yield. They usually sell options on more volatile stocks, which is great on the way up, but on the way down, of course, it's kind of it's a double-edged sword. Yeah, well, hopefully Bitcoin makes I mean, here's the bull case. Bitcoin's down. It makes a higher low, and then maybe in the meantime, something changes fundamentally. And then, of course, the other thing is that if the news flow improves, all we need is a tweet that said, you know, I'm sending Jared and whatever the other guy's name is, Witkoff. I'm sending Jared and Witkoff. They're going to Geneva and they're going to meet with the negotiators from the other side. And I think we're making good progress or something like that. And as a sign of good faith, Iran's letting 10 tankers cross the straits unimpeded while the talks are on or something like that would just cause a massive rally. Now, you know, but it could be one of those rallies like we had in April where it's a huge bull trap. I mean, we actually have to come through with the goods, but that's the bull case. The bull case is hopefully cooler heads prevail, or, you know, or whatever, however you want to look at it. That's hopefully the bull case is what I'm saying. It's not for the now, it's for the later. I hear you. Oh, I got you. I see what you're talking about. Sailors should step in and buy soon in the next few hours so he could tweet that he did it. Yeah, and he loves. What's his? Does anyone know Sailor's average price? I've seen it estimated, or his cost basis. Isn't it like 65 or something? Or, I mean, isn't it right around here? I thought I saw somebody say the other day it was at 65 or something. Yeah, gold and silver are in free fall. Yeah, let's go back to gold. Yeah, it sure is. I mean, is that just in the past hour since we started looking at it? No, it's actually bounced a little bit since we started looking at it. I came on at about, well, no, actually not. I mean, or because I came on at like, yeah, it's, I came on right here when gold was at 43.98. While I was talking, we went all the way down to 43.28, and now we're about where I came on. But yeah, gold and silver are definitely discouraging. I just focus on Bitcoin because it being a risk asset, and all risk assets tending to move together in times of crisis like we have now, or news-driven markets. People, you know, something's going really bad, they sell what they can sometimes, not, or what they have to. And so, but that's the biggest canary in the coal mine. Or here's the biggest bull case for the market is the fact that the crypto led on the way down. And as of the past week or so, crypto hasn't been as weak as the market. I mean, the crypto's been bouncing, trying to put in a low, making, you know, in the past month or something, crypto's been stronger. Maybe not the past couple of hours, but the bull case, I guess, for crypto is that crypto led on the way down. Even though the market may be screwed, crypto may lead the way back up too. I guess that's the bull case. So what are you guys? Oh, 77K. Okay. Sailors, I've been informed Sailors cost base is 77. So he'd be incentivized to buy it right here where we're at. And like you say, then he can tweet about it tomorrow. Did I hear somewhere today that Sailor doesn't publish his wallet addresses? and there's, I mean, and some people think, you know, that he may not even really, that that is just basically trust him on that kind of stuff. I mean, anyway, all right. So this is 5-minute Bitcoin, so we can kind of get, you know, but we're in a downtrend. I mean, here's the downtrend here's the bar that Oracle caught last night. Boom, boom. But anyway, we rallied up right to the faster moving average. And then it was another sell-off, rallied to the faster moving average, another sell-off. Need to take back the other moving average and get it turning up again. But I mean, this is just a 5-minute chart. On a 1-hour chart, to give more context, it's the same thing. You know, we made a new low, moving average just rolled over, went back up to the slower moving average, couldn't take the faster one back. It petered out. We didn't make a new low, but then it did this time. So, I mean, you could, using this as a parallel, we could easily, you know, there's a tweet tomorrow that Jared's going to the Middle East and we're going to start working on peace or whatever. That'd be great. But Bitcoin could go all the way up from 68 to 69 or even 70. And you'd still have to watch, the downtrend would still be in effect, right? So hang on, I'm going to go get something. I guess it doesn't matter if the screen's turned off. You guys didn't know I walked away. Somebody's texting me. I want to make sure I don't have something jacked up. These guys are playing, my nephews and nieces, my dad, my stepmom, my daughter, my son, nieces, nephew, they're all playing this fantasy, or they're doing brackets, and they're having so much fun talking trash. There they go. Gosh darn it. I'm so mad I didn't get involved because they're having a good time, but oh well. Too many people must be in here. It's just 14. I mean, that's pretty small, gosh darn screen for me. To see XPay from Round Hill under 50 is shocking. Yeah, we were talking XPay tonight a little bit. So let me show you what we were here. Let me take that off the screen. Okay, so in fact, I still have it up. So we're just looking at the past year, and I actually forget the conclusion we drew, but we were actually, the conversation started out on XPay versus XDTE. XDTE pays a higher yield. And we can see that. We can look at the trailing 12-month yield. This is the past 12 months, or it's so it's 14 out of 40, 33%. It's about a third. They've returned about a third of the money based on the starting price to shareholders, maybe 30%. This one down here paid 11 on 50, so that's about 1/5. About 20%. Well, of course, because it's a target fund. All right. So I would expect XPay to do better on total return and on NAV, which it definitely did. Not that XDT is not all right also. I mean, but XPay, that's a good look for XPay. So yeah, Oracle's saying it's shocking to see it under 50. It's but it's protecting capital better than XDTE. Or it's doing better the past year than XDT. But let's look at some other funds. Let's check XPay to, you know, the one people compare it to is SPY-T, because that's a Defiance product that's also a target fund. So it eliminates the one that's one's paying a higher yield than the other. But when you look at it that way, XPay still looks really good. Up 12.55. SPY-T is only up 10.5. That's a bad look for SPY-T right there, and a good look for XPay. All right. So what's the other 20% payer? Let's look at well, let's do this. Let's compare XPay with SDTY. Now this is from YieldMax. I don't think it'll do as well as XPay, but let's see how much difference there is. Yeah, and sure enough, it does better. Really, the comparison looks like maybe SDTY and XDTE. Let's look at those. Let's look at those two. XDTE from Round Hill, paying about 30% or so. I think SDTY is in the same neighborhood, the 30% neighborhood. And I mean, yeah, they're right together, 9.12 and 9%. but that's even though they're right together on total return, XDT is whooping their ass because XDT, look, the starting price is the same. So forget about fractions, forget about math. Starting price is the same. XDT gave you back $14 in dividends, a little bit more, and SDTY gave you just a little bit more than 11. So XDT is winning in offense and defense. I mean, they're, you know, of course, and that doesn't surprise me too much. XDT is a good fund. I guess now we have to compare it to WDTE, XDT to WDT, but I'm about ready to declare XDT the champion. Although XPay did a little better, but all right. So here we have WDT and XDT, and it looks like the yield's roughly the same. It is. I mean, I've worked out the math before. It's close. 9.12 to 9.19. Well, WDT edges that one out a little bit. WDT actually, if you look over here, did a better in the April pullback, did a little better too. So out of all of the competitors we looked at, WDT looks like it's doing the best. But forget about that. Let's look at how they've done in the past 3 months since the market started to sell off. Let's just look at, we'll just measure from December 22nd to, all right. That's a good look for, it's a good look for XDTE. Down a little bit less. Anyway, lots of good comparisons there. Yeah. Overpay, under deliver. I look at it as you know, it's your money. Like, oh, if you want to, it's your money. You can decide how you want to back. You worked hard to earn $100,000 or whatever. You're going to put it in. You can put it in a fund that pays 30% and you're going to get more yield, but you're going to have a little bit less NAV performance. You could put it in a fund like JEPI that only pays 8% yield, but has better NAV performance, lots better NAV performance. It's, you know, it's your choice, but yeah. So the way I look at it is you're starting in that big of a hole. You know, if you have a fund that pays 8%, you just need the underlying assets to increase by at least 8%. And if that happens, the fund will be able to offset it. But if you have a fund that's paying 30%, that works great. If the market's up 50% that year, you know, then you know, let's compare XDTE to JEPI, you know, so they're both good funds. They both could work. They're just different. Let's just put those on the chart. It's your money. You get to decide how they'll pay it back to you. So what I would say is what I would do if I had a job and I didn't need income right now, I would invest in JEPI. And, but if I did need income, you know, you could make a case for, okay, I'm going to take a chance because I'm trying to go for a little bit higher income and I'm willing to risk it. It's my money. Or the other thing is you could also say it's also a tactic. If you say, man, the market's going to be up easy, it's going to have a huge year in the market. I'm not going to get JEPI because they're just going to pay me 8%. Sure, it's fine, but I'd rather get XDT because I think the market's going to be up 30% and that'll offset the hole that they started in. I just look at it as a handicap. The yield is a handicap. Just a very simple way to look at it. One of these ones that pays you an 80% yield, they need those assets to be up 80% in a year. But some of those single stock ones can do it. It's possible, but I mean, that's the hole you've started in. Yeah, I was just looking for stuff to compare it with. I'm not trying to, I mean, we need to just keep forgetting about SDTY, seeing the way that XDT is handling it. So pretend I didn't mention it, but I just like to compare stuff. Round Hill's going to drop no matter what. The bull runs will keep it stable. Yeah, they're all going to drop. I mean, if the market goes down, there's not a whole lot they can do. Even the ones that do callers, like SPY-H and Triple QH. Why didn't I put SPY-H in here? I guess because it was part of the hedge show. Let's compare let's do this. Let's compare XDT. I think XDT, out of all the ones we're looking at, is the best mix of risk and reward. I don't care if XPay did a little bit better. So let's say XDT is kind of our base case for an aggressive S&P based high yield fund. Well, let's compare it against what it was the one I just said. What was I just talking about? I mean, we were talking about JEPI, but that I was trying to make a different point. Well, anyway, back to the JEPI point. Oh, yeah, SPY-H. Okay. So SPY-H, they use part of the money from the sold calls to buy puts. So it should be protected on the downside, but it doesn't always look like it gets that much protection. But let's see how it's been working out lately. So here's XDT and SPY-H. So even though SPY-H has protected downside, I mean, it's not doing that much better than XDTE. I guess here's the case for SPY-H, though. If you're living off the whole dividend, so forget about the yield, SPY-H's NAV has gone from 55 to 53, where if you're living off the whole dividend, XDT, your NAV's gone from 43 to 36 in a quarter. You know, if you spent the divvy. So I guess SPY-H does protect capital, but let's look at a year. But there's a cost for that. You in a bull market, there's an opportunity loss in a bull market. But it doesn't really look like one. Wow. I mean, there's not much opportunity loss there, is there, if at all? You can see, though, right over here, the puts were working because in whatever part of this pullback is in April, I know it looks like one of them came out April 3rd, 2025. SPY-H has been around, or is it QQQ? It's QQQH. QQQH has actually been around since 2019. I know this isn't a Q show, but QQQH has been around longer than QQQI. So we're going to pivot over to NASDAQ. Let's look at QQQH versus QQQI. And let's go back since inception. Let's go back to 2019. Well, I think that's a bad print. I don't think it really doubled in price there. There was probably something. So let's go to like 20. Let's go back a couple of years. Well, 24. There's no way that's right. Let's go. They must have had a ticker change or something. All right. So on a more recent look, I guess this is, what is that? That's a little bit more than a year. So there's the cost of the hedges. You do a little bit better on the downside, but you know, over the course of more than a year, you've left, you know, the difference between 15% total return and 12% total return is 25%. In other words, Triple QI compounded your money 25% faster over this time frame, but you were able to sleep at night. I mean, there might be other reasons you know that Triple QH might work for you. Nice, Red. That's the way. Oh, Red. Okay, 5%. Okay, let's talk about this. Red saying, since I'm retired, I've learned not to hold more than 5% in these funds. I hear you. You mean 5% in any one fund or 5% as the whole thing? I mean, in retirement, I think 60-40 is very standard. That's just that's just very standard. But I think bonds are dead. And I think for some people, it might work to do 60-30-10 or something and use the high yield funds in addition to bonds to generate extra income. But the less, the better. If 5% plus a little bonds and some REITs and some other normal type fixed income stuff is enough to meet your needs, absolutely. I mean, because it's not only about you. I mean, or with me, I mean, if I do a good job investing and everything, I'll be able to leave a little bit to my family. And so that's important also. So that's another reason not just to go 50% in high yield funds if you don't really need the money, you know, if you aren't trying to generate a bunch of cash flow. If, you know, the less is more because there is a sacrifice. But anyway, yeah. So did we already look at SDTY? Oh no, SPY-H. Okay, let's look at SPY-H. I don't know I forgot if we looked at this one, but let's check out a little SPY-H versus SPY for the past year. And then we'll zoom in and we'll look at some SPY-I or something. Okay, so the hedge is costing you, if you just stayed long in the SPY, you're plus 22. But SPY H, you're plus 17.8. That's pretty good in either event. But let's see SPY H compared to SPY I and see how you would have done. Well, I mean, SPY I is impressive. SPY I almost did as well as just the SPY. And I don't know that's why everyone likes it, but if SPY H helps you sleep at night, but even if we factor out the dividend, the NAV of SPY I has gone from 46 to 49. So it's up 3 points, even if you spent the whole dividend. That's really impressive. SPY H, though, is up about 5 points if you spent the whole dividend. But they started it, well, but one of them pays, but here's the difference. SPY I pays about twice the dividend of SPY H. SPY H is what, 9%, and SPY I is 13 or something. So not twice, but it pays another 33% extra. So that probably accounts for the difference in total return right there. But on NAV return, it looks like either one would have been all right, because you could have spent the whole dividend. And in both cases, the dividend was supported by total return. Let's go back 2 years. Let's see if we can go back a year further. No, it looks like that SPY H came out April 3rd of last year. Well, thank you, Oracle. I appreciate that. You're a huge fan of XDT. I don't want to be in it. I just don't want to be in it until it's done going down. Yeah. I hear you on that. I mean, at the end of the day, which way the market's going is more important than covered call, covered put, whatever, collar this, collar that. That stuff's all good. But at the end of the day, get the direction of the stocks right. Try to invest in high yield funds that have a strategy you like. Maybe you like covered puts more than covered calls. Maybe you like lightning spreads, whatever. But yeah, pick a stock that's going up and it solves one heck of a lot of problems. So I appreciate the compliment, Oracle. All right, guys, I think I'm going to get out of here. I mean, and barring any more questions, it's Sunday and I don't want to, I mean, we've been going for a while. It's 8:30. It's 9:30 on the East Coast where a lot of you guys are. So I will talk to you guys soon. Let me do my disclaimer here. Not financial advice. Check with the financial planner, licensed planners. License spelled right. It just doesn't look right. But anyway, for some reason, it just doesn't look right. But yeah, regardless of how it's spelled, that's why you should check with the license planner and don't listen to some idiot on YouTube that doesn't know how to spell licensed or can't tell by looking at it real quick if it's spelled right. That's a great use case right there for somebody that does this for a career. I did this for a career from like 94 to 1999. It was awesome. I had a blast and it was awesome. But a lot of stuff has probably changed since 1999. Like I was saying the other day, I used to sell no-load mutual funds. When was the last time you heard about a no-load mutual fund? I mean, anyway, but yeah, guys, I appreciate it. Hit like and subscribe if you don't mind. Also, if you'd like to support the channel, feel free to do so, and I always appreciate that. I don't know where my thing is right there. Support Max in the channel. PayPal.me/Max Convexity. All right, guys. Well, hey, thank you so much. And also, Chad, thank you for the $5. Thank you for the $5. Thank you guys for contributing. And I will talk to you guys. Oh, Zenful Rocks. I hadn't seen you. Anyway, thanks for being here. All right, guys. I'll talk to you later. Have a good day.